It's here. Kobe, if you can help us out with the video there, guys. This is a very, very special edition of our Xnode Masterclass that we usually do on Wednesdays. It is a different format, so I do apologize for any technical issues that we're having at this moment. We're trying to do something a little bit different because we have a special guest sitting here with us. And yesterday, I had the opportunity to go to a private meeting with some of the Debtbox top node holders and license holders and even token holders. And we were presented a new concept, which a lot of you guys have heard some rumors out there. We know Jason Anderson is very active in the Telegram group, so he is always letting stuff out there. So, we had the opportunity to go out and see what this layer one blockchain was going to be about. And I remember the first time I sat down with Jason and Jake, it's a year ago. Jason mentioned, yeah, we want to have our own blockchain. And I immediately thought in my mind, okay, this again. I've heard this over and over and over again, right? But obviously, I've got to know the Debt Council over the last year. I've got to know, Jason and Jake a lot better. And I realized when these guys say something, they're going to do it, right? And I think that's one thing that I want people out there to know and understand is that, when Debtbox, the Debt Council says they're going to do something, they get it done, right? And so I have with me here, and I don't know where we're at on which camera we're on, Colby, but I have with us today Jake Anderson from the Debt Council. So Jake, thank you for being here with us, and we're going to go through some of the stuff we talked about yesterday. So
yeah, thanks for having me.
I don't know which camera we're on. We have 3 angles here, so
we're kind of flying blind here.
We are flying blind on the screen, but let's go to kick this thing off. I know the people can hear us at least.
Okay, perfect.
Let's just have a conversation while we go through the visual stuff. So yesterday, was able to sit down and speak or hear from you and Jason and Roy. Unfortunately, Shad wasn't present.
Yeah.
But let's talk a little bit about this new debt chain, right? I've been really excited to be able to talk about it publicly. I guess first, what is the purpose of the debt chain?
Yeah, so let's take a look at where things stand today. Blockchain is very valuable because it gives us the ability to transmit a lot of data in a simultaneous form, right? And so right now, when you guys log into your back office, you have a complete overview of everything that's really happening from the digital side of things, the digital side of Debtbox. But Debtbox, as we've talked about for a long time now, is really 2 parts. It's the digital and the physical.
Correct.
And what we saw is really lack in the blockchain space of the transparency that could be brought forth on the physical side of things. And so just like right now, when you guys can go in and you can look at all of your tokens, the value, you can look at the strength of your mining nodes, what they're doing on a daily basis. There's all sorts of reporting that's accessible in the back office, but there's really nothing that gives you visibility over the physical side of Debtbox.
And that's the number one question I get all the time when we're marketing this thing is like, well, how do I really know that they have, 100+ wells, or how do I really know they have a grow in Colorado, or they're doing soybeans and this
right, exactly
and that, right? I think that's the number one question. And I know we can't see the chat right now, but I think the number one question we get asked as network, as brand ambassadors marketing the product is, how do I know they really have what they say they have?
Yes, absolutely. And when we started, we had to start somewhere. And so we obviously realized that the digital side of things was the most important thing to get out there to begin with. And there really wasn't a solution for us to get to the physical side of things. And so we've been developing this out. And what we really ultimately want to get to is the ability for you to access another layer of your back office, right? So every one of these projects has, call it a roadmap or a digital outline of different data sets that are critical in the production or the extraction of these different commodities that we're involved in, or these different projects that we're involved in. So let's take one of them, for example, like grow. Okay. Now, no matter what you're growing in terms of a crop, every plant goes through a certain life cycle,
Correct.
right?
Yeah.
And so step one is everything starts as a seed. Now, depending on what type of seed it is, you either plant it in the ground or you plant it in one of these containers that hold a lot of different, products. From there, it takes about 14 days for that to start sprouting and start gathering roots. From there, we transport that to a larger independent soil pot where it goes into what we call the vegetation stage. Okay. And that's where the plant is really growing and expanding. Okay. And by being able to control the light in some instances, or in the natural world, like what's going on over in Ghana, now you have this cycle of where the plant is maturing, right? And that takes anywhere from 21 days to 60 days, just depending on the type of plant that it is. And then it goes into the fruit side of things, where it is the flowering, is what they call it. And that can take anywhere from, call it 6 weeks to 10 weeks, again, depending on the different side of things. So there's all sorts of these little data points that gives people the ability to track something all the way from seed to cell. We want to be able to provide that transparency to everybody. So our goal at the end of the day is for you to be able to open up your back office and be able to see a grow facility. You're going to know exactly how many seeds are being planted in this time period. You're going to know the watering schedule of that. You're going to know how much light that plant is getting. You're going to know exactly when that seed goes into this tray, and that tray is held in this rack of this room of this location, and truly be able to see this process all the way seed to cell. The nice part about that is it also gives you an independent way to audit exactly what we're telling you. We want to be as fully transparent as possible. The difficulty right now is, in order for us to give validation to what we're doing, we have to take a big group and we have to go to these independent sites. But these things are located all over the world, so it really isn't practical. I mean, we've been fortunate enough to be able to take a few people and do these independent site visits on all the different sites. But what we want to be able to do is give people real-time information. So now we look at it from like a supply chain standpoint. Now, there's a lot of great technologies out there, software companies that have tracked these things from that side of things, but nothing that exists like that on the blockchain currently, right? Yeah. So we had to build it. That's been a process over the last 18 months that it's been mind-numbing, in all honesty. And
not a lot of people knew about it.
Yeah, not a lot of people knew about it. It was going on in the background, and we wanted to wait until we at least hit a certain level of expectation before we release it to the public, because we don't want to put something out there and not be able to deliver on it in a timely fashion. But going back to kind of what we're trying to do, in what's going on in Colorado, because cannabis is such a regulated entity, right? What other companies have done, and I'll give an example, everything in that industry is regulated by a company called Metric. And so every seed, once it becomes a flowering or whatever, about 4 inches tall, are coated every step of the way. So we have utilized what other people have done before us to implement it into this blockchain. And so at all these independent sites, you're going to have these barcodes with RFID chips that are going to be able to live stream, live track exactly what's going on every step of the way. The other nice thing is we operate off of a royalty agreement, right?
Correct.
And so this is going to allow the independent users to be able to track, seed, sell, that they're going to see the trust having that royalty, and they're going to see it acquire tokens and burn it. It's a full circle. That's fully transparent.
That's awesome. And I know us on as far as license holders or selling the licenses, even, like I said, that's the really know that these guys have what they say they have. And we've been having to take these trips out to Ghana, take these trips out to Colorado. It's time consuming. And you want to get an update on what's going on in Colorado, what's going on in Ghana. It's like, well, sometimes that could be a couple of days. It could be a couple of weeks. There's, a little bit of a lack of that telephone game, like, well, I heard from this person that's out in the field that this is going on. And that eliminates any of that
possible misinformation,
misinformation and delay of information, which hopefully allows us and the ecosystem on the digital side to now pick up and speed up as well. So I thought that was amazing. Let's talk a little bit about, where the industry of blockchain and the tokenization of assets is going, right? I know yesterday we had a presentation, kind of what is expected of this new call it asset class of, tokenized assets, and who's talking about?
So pretty much every major firm in the institutional side
Mhm.
has been talking about this. And what's ironic is it's been ramping up over the last couple months,
Correct.
right?
Yeah.
You're seeing the CEO of BlackRock come out and say this is going to be the next big movement. Some of these big Fortune 500 companies, asset management companies, they know that the tokenization of assets is going to be the next wave of blockchain. Now, there's many different ways to accomplish that. I think the way that they're looking at it from a singularity standpoint is just the fractional ownership side of
Correct.
things, which I think is a little bit narrow-minded, in all honesty. What we can do in tokenizing these assets is far greater than just that, although that does play a part, and I do think that's a very valuable thing.
Correct.
So we just look at it from a different mindset of saying we want to digitize a system of royalties that participate in a blockchain project. And we've seen what that effect has over these token prices since conception. And we talked a little bit about that yesterday as well.
Mhm.
So
this industry is growing. It
Mhm.
brings transparency to something that we're already doing. It brings, it eliminates misinformation.
Mhm.
So let's talk a little bit about, the implement. What does it look like from, this idea phase? I know you guys have already worked on a lot, but to implementation phase,
Mhm.
are we talking years, months? I know you can't give me exacts, and I know the answer, but I just want the people to hear it.
Yeah. So I'll use an example of this, right? If you look at any project that's complex, right? There's kind of the architect stage of it. There's the implementation stage of it. But if you've ever built a house,
Yeah.
right? It seems like for the first couple phases, you see a lot of progress really quick, right?
Yeah.
And a lot of it seems like it's getting done. The walls go up, the paint goes in, this and that. And then you reach this point where almost it looks done, but you're going back and you're making all just the fine-tuned touches.
Yeah.
It's like pushing the football all the way down to like the 5th yard line. And then all of a sudden you just hit this resistance point, right?
Correct.
And so we have to be very real about that type of time frame. So what I can say is the architecture is done, right? The fundamentals are there. What we're in right now is we are trying to gather as much information as we can to make sure that the blockchain, once we release it, it's immutable, number one, so we can't change it.
Correct.
And so we need to make sure that it's inclusionary enough to be able to support all of the projects we have now and all of the projects we will eventually have down the road, which requires a lot of forward thinking. And so that's kind of where we're at now. Now, the difficulty in that is I don't know what I don't know. And so as we're gathering this information, we may have a great idea that says, okay, let's implement this, or this specific project may require that. But by implementing this, it might change something down here. And so there's going to be a lot of testing that goes on in order to get us that last 5 yards into full implementation. Obviously, our attorneys tell us let's never be specific on time frame, because technology is just one of those things where it always takes twice as long. It always costs twice as much as you plan for. But the reality is we do think we're at a point where we can start talking about this very legitimately. It's very real, and it's around the corner, whether that's 6 months away, 3 months away, or maybe even expands past that. What I'll tell you is this: we feel that this is going to be so revolutionary in the blockchain space, it would shorthand us to release it early. We need to make sure that it's right. We need to make sure that every I is dotted, every T is crossed. And that means, unfortunately, if we have to postpone it, we will, because we need to make sure that the final product is exactly what it needs to be.
And I want to bring up 2 things with this, but real quick, guys, if you guys, are listening to us right now, my hope is that you guys are getting some information. What I want you guys to do is start to write down some questions, okay? If you want to put them in the chat box, since right now we'll go back up and look at them. But make sure they're good quality questions, they're formatted, so we don't have to go back and forth. So I want you guys to start thinking about the questions that might be popping up in your mind, but let's structure those questions so we can get some good content out of it. So I just want to leave you guys with that. The 2 things that I want the community to understand is, number one, is this, and I know the answer, but I'm going to pose this question this way: is this blockchain going to be a private semi-decentralized blockchain, or is it kind of going to be on the open source side, or what's the plan with the blockchain, the layer one blockchain with time?
Okay, so number one, our intent, and Jason and I really have felt this way from the very beginning, is we have something different here.
Yeah.
What we have done mixing the crypto and commodities in the way, in the format that we've done it, with the deflationary tokens where they're constantly decreasing in size and market space, and at the same time the demand for it through the royalty agreement is constantly growing, is something that's never been done before. And we feel like we've hit a complete home run with it. Now, sometimes companies would look at that business model and say, I want to protect it.
Yeah.
I want to,
Keep it to
it's
myself.
me, mine, this, that. We want to set it free. We believe that this is going to be the next evolution of how business is done, to create ultimately what we call a store of value.
Mm-hmm.
We all understand that the US dollar has lost 90% of its value over the last 50 years. A lot of times people have fled to the commodity sector in times of, turbulent economics. But investing in commodities is almost troublesome.
Mm-hmm.
I mean, if you can't move it, you can't sell it, you can't transact in it, then what is it good for?
Correct.
Ultimately?
Yeah.
We need to be able to feed our families, put food on the table, and that. And so we believe we have the business model moving forward. We want to set the gold standard in how business is done.
Mm-hmm.
And so we're going to open source everything.
Okay. And what I want people to understand about open source, guys, is this is, you guys talked about this yesterday. And I'm not taking any sides or any opinion. Mm-hmm. So I'm not trying to go for one blockchain or another, but you look at something like Bitcoin, and Bitcoin is the pinnacle of decentralization, right? Mm-hmm. Nobody knows who owns it. Government can try to shut it down, but they shut down a warehouse at a time, but they really can't shut it down. And then you look at something like Ethereum, right? Where it's centralized, it's semi-decentralized, if you will. And then you look at something like, Binance Smart Chain, which we currently run on, right? Which is more of a centralized blockchain. Mm-hmm. So what open source means, guys, is what DET is setting up is going to that Bitcoin pinnacle standard of decentralization. That means that you will be able to have a device in your home that you will be able to mine off of, in the future. DET coin, not DET token, but at this point, DET coin would then be rewarded for those miners that are out there. So open source, it gives a lot of longevity to the project, right? As long as we have belief in it. And I don't know if you have some of those numbers, Jake, but can you talk a little bit? We're talking about Bitcoin, we're talking about Ethereum and Binance Smart Chain or Solana, but you had a really cool graph up yesterday when it talked about the amount of nodes that were needed to keep the blockchain up and running. And then I want to kind of pivot into the nodes and what it kind of looks like inside of the layer one blockchain.
So it might actually be easier to do it the opposite
way.
Let's talk about the architecture of the blockchain and what makes this different than everything else.
Okay.
When you think about a standard blockchains are designed in a very linear format, which is why they call it a chain, right? It's a bunch of data sets in a row that are validating each other front to back.
Correct.
It's just this line of communication that consistently goes like this and validates itself, right? Now, the interesting thing about blockchain, like you mentioned, Bitcoin was the pinnacle. Now, blockchain, theoretically, this concept has existed far beyond or far before Bitcoin. People have been using distributed ledgers, for different practices long before that. Mm-hmm. But when you think about what everything that is currently out there is modeled after, it's really almost modeled after antiquated technology. Mm-hmm. And what I mean by that is, Bitcoin was really formatted in the 2008, 2009 era after the USA market crash. At that time, we were all having iPhone 1s.
Correct.
Now think about the difference between the original iPhone and the iPhone that just came out.
Yeah.
Technology's come a long way. And so to build something or build a foundation off of something that's 15 years old isn't really self-serving in a lot of ways. When we need to look forward, you have quantum mechanics, you have artificial intelligence, you have all these things that have just made leaps and bounds. We need to be able to look at what blockchain is and streamline it for the next century.
Correct.
Right? And so that's where we're different. One of the best analogies that I've ever heard, a gentleman was talking about an airport runway. And consider the blockchain, the airport runway. You have information that's coming and going, coming and going, coming and going. But as these networks expand and grow and get more adoption, and keep in mind, I can't remember what the percentage is, but it's like less than 5% of people are currently on blockchain.
Correct.
In some
Very
shape
few.
or
Yeah.
form. Very, very few.
Yeah.
If we really want that to grow into the 50, 60, 70%, that you're going to create a traffic jam. It's going to look like the, highway in California during midday. I mean, just all backed up in information, which is why some of these transactions in these traditional blockchains start to take longer. They start to cost more in gas fees because there's just so much information being crunched in an inefficient manner.
Correct.
Right. So we looked at that as step one of our problem. And so the way that we look at things is very geometrically. Okay. There's a lot of ways that you can construct this, but logic would tell you that the fastest link between 2 points is a straight line.
Yeah.
But if you go back to the theoretical physics of it, Einstein told us that that's not really the case. You could take 2 points and bend space and time and connect them together through a wormhole almost, right? And again, this is not new theories, but it's just being newly implemented into technology that wasn't even available 15 years ago. And so if you look at the architecture of our blockchain, it looks much different. And I have an example here, a visual.
Love to see it. Yeah, definitely. And I think this is interesting. While Jake gets this set up, is kind of think of it, guys. Blockchain, right? It's a chain. Just think of these links, or like Jake said, a runway. You're going from point A to point B, and you have to go. So it's taking this long runway of information. We all know, people that are crypto enthusiasts, Bitcoin has gotten very slow. And they put some stuff in there to scale it, and they've done some good things, right? Even in Ethereum, they've gotten it down, but it's like you said, antiquated. It's old.
But what would happen if 50% of the population all of a sudden jumped on it?
We're at 4%. So now imagine we try to scale to 50%. It's gonna
crash the system.
It's gonna crash the system, right? And we always talk about, real quick, because I know we always talk about blockchain. We talk about the slowness and of Bitcoin, and then how expensive Ethereum got over the last couple of years as the NFT space started to grow. But then, people are always talking about, cryptocurrencies being a payment solution, but then you have Visa, MasterCard, they process
a lot quicker,
right? And so you're trying to say, well, why would I go from something that processes 100x over here to something that's 1x? And yeah, it's a little bit more inexpensive. In some cases, it was getting more expensive, but it just wasn't a solution at the time, right? So I think kind of the solution that I saw yesterday is that this, as it grows, gets better. I'll leave it at that for your example.
Yeah. And so, okay, where we look at this differently, and it's hard to illustrate really unless you kind of see it in action, which you guys got a little bit of a sneak peek, and we'll be releasing some of that more and more as time goes on. But this is just kind of a little, maybe corny visual. Yeah. But this right here is just a black box. Now, can you see what's inside this black box? No.
Nope.
Okay. Now, this is in essence what crypto kind of started out as. It had a lot of sovereignty and anonymity behind it, right?
Yeah.
Through these wallets that were numbered and not named. You could transact, with people one-on-one, peer-to-peer.
From my wallet to your wallet, and then it goes into my wallet. You can see into it on the ledger, but unless you knew what the address was.
But that's the other thing, is what's in your wallet is really just a representation of what's happening on the actual chain.
Correct.
Right?
Yeah.
It's all the information stored there in a distributed format. So this is our version, and we'll call it a wallet for now, but it really doesn't function the same as a wallet. It's more of a container.
Okay.
And we'll come up with some clever name to do it. We're tossing around a couple different things.
Okay.
But contained within this is its own separate blockchain of transactions that are just mined just completely with it outside the realm of the blockchain, right? When I open this, all of the data points, instead of being linear, are actually more geometric in the way that they operate. Okay. And so just like the illustration that we gave about the 2 points, instead of having to go from this point and connect and validate all the way, you
Mhm.
can just close it in and open it back up.
So as you close it in, it gets closer, transaction, then it
Mhm.
expands back out.
Yep. And so everybody's pocket has its own blockchain within it
Mhm.
that is then connected to a larger system of blockchain. It's a blockchain within a blockchain. It's a really new way to think
Mhm.
about how blockchain works. But what this does is it allows us to transmit an unbelievable amount of data relatively easy. Think of it like a mesh network, or think of it like a hive.
Mhm.
It falls really under more of that category than it does your traditional start to finish linear
Blockchain.
system.
Yeah.
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 And what that does is it makes the scalability unbelievable.
Mhm.
The more we grow, the more of this that's going on. Every time you add a new wallet, every time you add a new point, you're adding to this geometric, almost breathing, living organism
Mhm.
of a blockchain, right?
Yeah.
And that's going to allow us, again, with what we're trying to do with the physical side of things and all of the data that's being transmitted from every different part of the world, all being collected and distributed evenly, really streamlined, really real time, and all of that. So we were talking about comparing it,
Yeah.
right?
Yeah.
So if you Google, layer 1 comparisons or this or that, you can come up with, there's really only about a handful
Of layer one
of layer
blockchain.
ones that are mainstream and legitimate.
And let's talk about that for just 1 second, right? Having a layer 1 blockchain in and of itself is a huge feat. Even if it was one of these old antiquated ones with just old technology, right? There's very few out there, right? We can probably, like you said, on 2 hands, we could probably count the legitimate ones. Now, I'll let you continue. I just wanted to say, guys, to understand the importance of actually debt having its own layer 1 blockchain.
It's significant.
Yeah.
And especially when you compare the significance of that with the significance of our growth.
Yeah.
And then you compare that to the significance of just our model and how different it is. It really is going to give us an opportunity to present to the world a different alternative.
Correct.
Okay. So in looking at the transaction speed, the cost, and all of that, I just pulled this off the internet, so I'm not I can't validate whether this is accurate information or not, but it says typically a Binance Smart Chain can process about 100 transactions a second.
Okay.
Okay. If you get into some of the newer technologies like Tron, you're up to about 1,000 transactions a second.
Okay.
Now,
Pretty good.
Solana kind of broke the mold and created their own version of how they do transactions, and they're up to about 65,000 transactions a second. It's significantly faster, right? Now, obviously, we have only been able to do this in a test module,
So there's some caveats here, right? For this is testing data.
Yeah. Because we really don't know, and you'll understand this in a second when we talk about how this thing is expanding and the difference. It's hard for us to really pinpoint it. But in a relatively small testing environment with the amount of nodes that are running, contributing to the computing power, we've been able to hit in excess of 500,000 transactions a second.
Wow.
I mean, almost 10 times what our next best option is.
Correct. So I want you guys to hear that again real quick. 500,000 transactions per second.
Yes.
So that's absolutely amazing, guys.
It's significant.
It's significantly faster than any other blockchain that's currently out there, obviously with the caveat that this is test data. But as Jake was showing, the representation of the geometry of the blockchain no longer being linear, but geometric, it allows us to compute and transact a lot quicker. So that's what I want you guys to understand. As this, and I'll just pull this out real quick. So as this thing grows, from what I understand, as this grows, right, it gets bigger and bigger and bigger. And then there's these inside of another bigger blockchain. As it grows and contracts, the information, the data is able to actually speed up instead of slow down.
Yeah.
Because it no longer has to go from point A to point B. It could go from point A to point B,
or Z,
or anywhere, and really get to where it needs to really quickly. So 500,000 transactions per second.
Now, if we look at the other measuring things, you look at transaction fee, right? Now, obviously, the ball's in our court here. So we're going to make sure that the transaction fee is comparable to anything else
Anything
that's
out
out
there,
there and try to
correct.
undercut anything out there. But I know that there's a few layer one blockchains that promote free. We don't want to do that because we're capitalists, right?
Correct.
We want to build an ecosystem that's thriving. And so there needs to be something there, but we want to make it very affordable in the long run.
Well, and then so real quick, just so people can understand this, is does that mean when we move off of the Binance Smart Chain, where we currently need to
Mhm.
have, BNB
BNB.
in our wallet, when we move over to this debt chain,
Mhm.
what do we need to have in our wallet to transact?
Debt.
Debt.
Mhm.
And that debt, and I want to clarify this, just a little bit of education. So when you have a crypto on a layer 2, it's called a token,
Correct.
right? And when you have it on a layer 1, like Bitcoin's a layer 1, Ethereum's a layer 1, debt at this point would be a layer 1,
Layer
or BNB is a layer 1, right?
Mhm.
They're called coins. So this is just to get you guys educated a little bit, is when you hear, the term coin thrown around, debt coin, what's the difference between debt coin and debt token? There is no difference. One is just listed. One is it's a layer 2 because right now we're built
We're
off
on
of
Binance.
we're
Yeah.
on Binance. Once we move over to our layer 1, debt token is debt coin.
Mhm.
Debt coin then becomes the gas for transactions
Of any project that's on the debt chain.
of any project that is on the debt
So
chain.
Aluminum, Explorer, Grow, Blocks, all of the ones that we currently have. And more importantly, and we'll get to this in a second, all the future projects that are
Projects.
on will have to use debt as the gas.
Correct. So
Which is also why debt is built differently than the other tokens. And a lot of people have asked us, well, why do you play around with so many different tokenomics, right?
Yeah.
Well, debt was designed for this in mind. That's
Correct.
why there's only 50 million in circulation. That's why there isn't a deflationary nature to the debt token. And that's why there's currently no gas fee to move it.
Correct. And so the thing about it is, well, and I don't want to sidetrack us out here, right?
Yeah.
But we just passed a vote for debt micros as
Mhm.
well. So anybody that's out there and you really believe in what we're doing with the layer 1 blockchain, and if you're not a current debt license holder, meaning you're mining debt continuously, getting your hands on some of these debt micros would be very beneficial at this point, right? Because as the layer 1 blockchain grows and grows and grows and grows, it's going to need more and more gas fees.
Mhm.
And we've seen what some of these coins have done that have been layer 1s, right? Ether for
Yeah.
Ethereum. A lot of people don't know. It's really the coin is called Ether for Ethereum, right? Bitcoin. You have even BNB. That BNB started off at around $7 to $10 in
Mhm.
that range, and is gone upwards of 400 and is floating around 250, right? So these coins now have a lot of upward potential because you start onboarding more projects, right? Binance, and I don't know if you have any of the numbers, how many projects were actually built on Binance or Ethereum? Yeah, I know you have some of the data out there.
I don't have the exact number off the top of my head, but I think that there were 114,000 layer 2s that were produced last year.
Mhm.
Binance itself, I think, did over 7,000 projects in January.
Yeah,
It's a growing market. There's more and more people that are wanting to develop projects in the blockchain space. It's becoming a growing field. In
like
its
we
own.
talked about,
Yeah.
right? Especially in the tokenization of assets,
Mhm.
it's something that a lot of even institutions. So as institutions start to do it, I think companies are going to want to start to do it, and institutions are going to have their, I think, limitations that they want to put on the companies. And I love what we're doing. Going back to the open source of it, is how quickly can I get my project up and running and tokenized, digitized to, whether it's a piece of real estate or another gold mine
Mhm.
or some other type of commodity. I think having that ability to be open source, like the vision that you guys have to build projects on this layer 1, is going to be absolutely mind-blowing. Because the number one question that I get when we're doing presentations is, how do I know that what we talked about, how do I know what they're saying is real? How there's no transparency right now, besides a site
And it
visit.
makes sense, right? Because we're touting that
Correct.
that's what makes us different.
Correct.
And yet there's really no way to validate this side of
No.
it, which is in essence kind of the secret sauce
Correct.
behind these
That-
projects.
And then the number two question that I get is, well, how do I get my mine tokenized? How do I tokenize I have this, my NFT game, or I have my real estate this, or I have some small business that I want to tokenize. How can I do that? And it's been a wait type of game, right? So those are the two top questions that I get, and you're giving us solutions to those today. So let's just say somebody in India or somebody in Indonesia or somebody here in the US had some type of small business that they're willing to give up a royalty on.
Mhm.
Could they come in and list their project on the debt chain?
Yeah, so that's the beautiful thing about open sourcing our model. Now, our blockchain is going to be very, very specific in its nature. In order to participate and list something on the debt chain, you're going to have to follow our business model, which means the projects are going to have to be vetted. They're going to have to be royalty-based, income producing, deflationary in value. This is our model. And if you don't want to fit within our box, then this is not the place for you.
Correct.
Because we're trying to create a gold standard in the way that this crypto universe is kind of growing and expanding, especially in the terms of tokenizing assets. And so what we are going to do now that we have this layer one built out, and our focus is going to shift slightly to how do we support new projects coming on board. And for that, we're going to have the debt toolbox. So we have a whole development team that's going to be solely isolated off to develop tools that make it easier for people to launch their own projects on our blockchain. And here's how it's going to work. It's going to be very, very simple. If you're a developer, because it's open source, you could do all this on your own without any of our help or interaction whatsoever.
Correct.
It's like we didn't need Binance's permission necessarily to build a layer 2 on the Binance network, which is where we started from.
Correct.
So the same
But how much did it cost, and how much time did it take?
a lot.
Okay.
But so we're going to have a one-stop shop. Think about it like a build a crypto, forum. There's a lot of, I could go and try to code a website from start to finish. And how long would that take me? How
And
long?
it used to be hard. Right?
It used to be very hard.
Yeah.
Well, what's made it easier?
Drag
is
and
the
drops.
tools,
Yeah.
right?
Yeah. The little drag
And so
and drops.
there's
text.
companies like Divi and Wix that have made this very simple so that people without even a technological background can go in and just kind of create their own website. Now, it may not be perfect in the way that it looks or functions, but at least the foundation of it's there. So we're going to build the same thing. So we have a questionnaire that basically is going to look at all the different aspects that are required for the blockchain. So what is your allocation of coins? How many nodes do you want? What value do you want those nodes at? What kind of royalty is going in? And you're just going to walk through step by step by step and give us the pro forma of your business. What's your growth strategy? Who are the owners? This is the important part. In order to be on our blockchain, everybody's going to have to KYC. So there is not going to be this anonymity of a meme coin that's going to be launched on the blockchain. It won't exist that way. Everything's going to have to be vetted. Everything's going to have to be transparent in that function. So literally somebody could come off the street, walk through this tool, as long as they had a rough outline of a business plan, right? If they started from scratch, this would take longer because the devil's in the details and it always takes longer to write this stuff out. But if you have a plan going into it, you could literally come on the debt chain and launch a project within 48 hours.
Wow. And so it's those the toolbox and the features. And we saw some, obviously some graphics of how it is. It's really simple, guys. Just so you know, it's just like a wizard, basically. Questionnaire, you fill out the information, you click next, takes you to the next section. And as you go through, it's building out everything that you want, right?
Even to the degree, all the information that you're putting in there is going to be sorted. And at the end of it, it's going to put out your light paper.
It's going to create your light paper
or at
for
least
you.
the framework for the light paper that you can then go and add the graphics and this and that.
Correct.
But the framework
that's
is
really
gonna be
cool.
there.
Now let's talk about this because you talked about KYC a little bit. So if I am, in crypto, the bad thing about crypto is you get all this anonymity behind it, right? And people go out there, create these pump and dumps, as we call them, rug pulls, right? And they take all the liquidity out and somebody gets left holding the bag. So let's talk about what are some of the things that are going to happen on the debt chain. You talked about, as I can't just come in and say I have a fake, I have a piece of land and I want to tokenize it, right? There's going to be some process that publisher or that owner needs to go through in order to get listed as a real project on the debt chain, right?
Mhm. Yeah, there's it's all about validation, right?
Uh-huh.
And so there's going to be third party validation every step of the way. Just to we can't solve every problem that exists. People that are fraudulent find clever ways to be fraudulent,
Correct.
if you will. But what we want to do is we want to remove all of the kind of red flags that you would see kind of right away.
Mhm.
And so the first part of that is, like you said, traditional blockchain. I can take a picture of my dog and I can hire influencers to promote this thing. Nobody knows who I am. Nobody knows the amount of token that I control because I might have it in 100 or 1,000 or 1,000,000 different wallets at that time,
Yeah.
right? All I got to do is build public trust, get a few of the FOMO, get a few of the influencers behind it, celebrity endorsements. We've seen it all. Pump the price up, and then I can start just selling into the market and rip all the liquidity out of it. Classic rug pull, right?
Mhm.
So what we have instituted is what we are at least temporarily calling the RPF protocol, which is the rug pull free protocol.
RPF. I love it.
RPF, yeah.
Rug pull free protocol.
Yeah.
Okay.
So with that, there's going to be a full KYC of ownership. We need to know who's behind these projects, right?
Mhm.
You need to know who to go after if something goes wrong.
Correct.
Number one, you need to know
Yeah.
who to call. I think that, if you knew how little people knew about blockchain that started some of these projects,
You would not get
it would be a
involved.
red flag,
Yeah.
for sure. Not to say you wouldn't get involved, but at least it might press you to do that next level of investigation
Mhm.
before you did. You're not just gonna, on a whim buy something if it doesn't add up, right? So KYC is going to be a big part of that. Again, it has to be deflationary in nature. It has to have a royalty model going into it. You're going to have to produce the financials and the audit trail in order to be a part of what we're doing. In essence, you're going to have to model exactly what we have done,
Mhm.
right? And we've actually gotten this because of the success of what we've been able to do, and we've gotten the attention of some of these institution, level people.
Mhm.
Kind of one of the cool things that we're going to be able to offer that nobody is going to be able to offer, at least right now. We're going to have such a jump start, is we're actually able to put a rated or better insurance bond behind it, protecting you against fraud for projects that are listed on the debt chain.
Wow. So, and I want to talk about that real quick. Insured against fraud,
Mhm.
right? There was a talk about a viability standard as well, and what that
Mhm.
means is the projects when they're getting listed, sometimes you believe in a project, you might believe in it personally, but the masses might not believe in it, or other
Right.
people might not think like, hey, well, just because I think it's a good idea doesn't mean it's a good idea to sell, right?
Mhm.
And so there's a viability point with a refund mechanism. I think those two
Yeah.
things are very important for people to understand
Yeah, let's
as
touch
they
on
get involved in them.
So every project, when it comes to financing, at least, has kind of a viability mark and then like an optimization mark, right?
Mhm.
So I might be able to use the bank's money to buy this apartment complex or this multifamily unit. And let's say I want to, pool together, $30 million to invest in this, right? Well, I might be able to make this project work with 5 to 7 million.
Mhm.
But ultimately, I would love to get 30 million because then it's totally owned. You remove a whole nother level of risk, right?
Correct.
A default or anything like that. And so as I start to market that project, obviously it's very risky, even if it's a wonderful project, for somebody to want to buy the first node, because you don't know. I mean, what happens if not enough
People
software
get involved,
sells in
yeah.
order to create the financing to make the project viable? So there's
Mhm.
a viability, kind of like a low water mark, if you will.
Mhm.
So all of the funds that are generated by the sale of software licenses are going to go into a smart contract. And that smart contract is going to have a trigger to it, which is the viability mark. If that viability mark is not hit within a certain period of time, predetermined certain period of time, then it's going to automatically kick all those funds back to the individuals.
I think that's the coolest thing ever, right?
Yeah.
Because sometimes you invest, you might want to get in the traditional space,
Mhm.
right? You might want to invest into something, well, and the project never launches, and the capital company or the fund company is holding on to your funds for years,
Mhm.
even, right? And you could use that capital at that point. So I think that's a really
Redirect that to something more
redirect that
valuable.
to something, in maybe another project that's listed
Mhm.
on the debt chain that is, smoking hot at the time, right? Because like I said, just because I think it's a good idea to purchase that doesn't mean everybody else is going to think it's a good idea. So what I want people to understand, guys, and I want to kind of switch gears here, maybe answer some questions, and we'll kind of start
Let's
wrapping
talk about
up.
one more thing. real
Okay.
quick.
Yeah, no problem.
Because it falls right in line with this. So now that we have open sourced our model, and again, what the viewership may not understand is literally how many calls we get.
Yeah.
When I was up giving the presentation yesterday, my phone rang twice.
Yeah.
With, hey, I've got this mine, or I've got this, which is great. We have the satellite technology that can help in those senses. But again, we don't want to be narrow-minded enough just to focus on the raw earth, commodities. We want to look at the bigger scale of things, which gets into real estate holdings and other small businesses and things like that. But we get this all the time. So now that we have projects that are being listed on the debt chain, what the second part of the debt toolbox is going to be is the debt marketplace. Okay. Think of this as the crowdfunding of blockchain.
Yeah.
So we're going to have a marketplace that's going to list all of the newest node projects that are available from the debt chain that all fall underneath our same model. They have certain protections in there via the fraud insurance and this and that. And so it's going to be the GoFundMe or the Kickstarter.
Yeah.
Right.
Yeah.
Well, Kickstarter's raised almost $8 billion in project financing. Now, how much more likely would you be to buy a software node if you knew that you had total transparency? You knew exactly where every dollar was being spent. You could track it seed to sell all the way through. It makes it very viable. The fact that all of that transparency is there is a natural deterrent for people that have nefarious, intentions, right?
Yeah.
And so again, we can't weed out all, bad actors, but we're doing everything we can to create a marketplace of true stored value.
That's awesome.
Yeah.
That is amazing. And so guys, what I want to do here really quickly is maybe take the next, 5 to 10 minutes when we're here with Jake. I'm going to kind of sift over this way and kind of look at this. So I got one here. Love what you are doing. Wondering, I'm going to move my mic over here so you can hear me better. Love what you are doing. Wondering if you can address the SEC squeeze on crypto and how this affects Debtbox. Really good question.
What? That's actually,
we talked about
cover it today, but we talked about it a lot.
We did talk about that yesterday. Yeah.
So our number one concern is protecting what we have built here.
Correct.
We have intended from day one for this thing to far outlive the debt council, our kids. I mean, we want to build something that lasts. It is very, very hard to build something when you don't even understand the laws that you're under.
Yeah, they don't want to give you the laws.
Yeah.
Yeah.
And that is all jurisdictional based, right? And so one of the things that we have done is we have moved all of the operations currently to Abu Dhabi. Okay. Abu Dhabi has been very straightforward about what their stand is.
They've given a framework.
Yes.
Yeah.
Crystal clear. And it's to incentivize that, they've created what they want to become kind of the global center for cryptocurrency. So they're inviting us in here. It's actually really cool. Our partnership with the royal family, they actually gave us the entire 5th floor of one of their financial towers in downtown Abu Dhabi. So we're moving everything over there. And so we're going to be under the jurisdictional, control of Abu Dhabi, not the SEC.
Correct.
Now, when you match that with what we've done here, that's going to give people certain protections, because the bodies that are here that are causing the problems aren't even going to understand or know how to look and see what's here.
Correct.
So we can get into that. I mean, we can spend hours.
Well, and from my point of view too, is like the SEC right now, they have, those are come in with administrations, right? The chairs come in with administrations. Those can change here in the next couple of years, either pro or con, could be, because we don't know who's going to get elected. But what I love is like what I said in the beginning, the debt council and the debt chain, they're doing everything they can to protect the user base, the node holders, to bring real projects into this. And that will be for listing external projects. And when we don't have a clear framework of how the law is going to work in this jurisdiction here in the US, it's really hard to do business, because you don't know if you're doing anything right or anything wrong. They just come after you after the fact.
Well, that's the problem is they won't tell you what you can do. They'll just tell you what you can't.
Correct. And after we've done
And
it.
after.
Yeah.
And even if you look at everything they told you couldn't do and you follow every one of those rules, they can still come in for any reason that's, beyond you or me.
Yeah.
They'd wake up on the wrong side of the bed. They have a chip on it, whatever it might be, and just cause problems. So the other way we're going to protect against that is full decentralization. So one of the things, and I'll just real quickly, the software in order to run the blockchain can be operated on a mobile device, which means every one of the phones that currently has the debt app downloaded on their phone, there will be an upgrade to that. And your phone will start being the validation for the network. Your phone is going to be this network of geodes that are just building and growing everywhere that are going to streamline everything. If you look at that,
I'm just laughing over here because it's just
tens of thousands,
mind blowing.
Day one.
Yeah.
Now, our entire blockchain can operate off of 4 of those. Four. That's all we need. And so literally in order to shut it down, you now have to shut down every cell phone provider. You have to crash the internet. It won't happen.
Yeah.
So there's a lot of things that we have done in the background to, again, focus on that protection side of things.
Awesome. All right, let's move on here. All right. What are the milestones we, as a community, I'm assuming, need to meet in the ecosystem so that everything is ready for the launch of DebtChain? For example, it has been mentioned that we must first wait for 100% of the debt licenses to be sold. What other milestones would need to be met?
Yeah, really, we're there. The debt licenses, we had the vote, we're releasing the micros. I'm not concerned about that side of things.
It'll sell out pretty quick.
It's going to sell out pretty quickly, so that's going to take care of itself. What we are asking from the community is, because I'm sure the community has the same thing as they're spreading this word, they're like, oh, I have this idea, I have that idea. The more, and we'll release an email address, and actually I think I have it here.
Yeah, let's keep that for, because we'll get, I'll release that at another time for sure. Yeah.
But we want you guys to drive the innovation
in 30 seconds.
So we need to put our eyes on as many projects as we can, because again, as we're building out the infrastructure of all these different data points that we need to track from the real world point of view, not every real estate project is going to have the same points. Not every even gold mine or ruby or gem or whatever it might be. So we just need to collectively pull our resources together from a thought standpoint and really think this through so that when we launch the debt chain, we have it all covered.
Okay. Awesome. Let's see if we have it. When we talk about our own blockchain, as we know, we are currently working on BEP20. So does it mean that we have to get our debt 20 sort of thing on a different exchange, that we'll need to have our own exchange for that, or we'll need to have our own exchange for that?
Yeah. Let us worry about that.
Yeah.
Obviously, when we do have this fork and we bridge everybody over to the new thing, we will already have these talks going with the exchanges that we're currently on.
Yeah.
We have temporarily paused the Binance thing just because of the chaos
what's going on with it right now. Correct.
But so our focus is now kind of somewhat shifted to, let's just get this up and going so that we're not spending the time, money, and resources to get listed on this exchange that we don't even know
it's going to survive
either. 6 months from now.
Yeah. And I want to point that out really quickly, just to kind of highlight some things, is, because I get asked all the time, when are we getting on Binance? Because I know that was a big push, 8 months, 10 months ago. And like Jake just said, that's paused because of what's going on with lawsuits and governments and all that kind of stuff. So, and I think that really started when the FTX debacle happened. So for me, just being listed on a centralized exchange in today's age doesn't mean anything. I think crypto needs to get back to its true nature of decentralized exchanges. And I know you guys, as you guys all know out there, and I hope you guys will agree with me in this comment, is when the Debt Council says they're going to have something listed on a decentralized exchange by a certain date at a certain time, it happens. And so when we need to have, our layer 1 coin listed with the liquidity for the projects to swap in and out on those decentralized exchanges, it'll be there. That's something that I know you guys are really good at. All right. Next one, question. Will we have the ability through the open source model to have 100% control over our own assets, and will these be required to be reported on any annual tax returns or dividends that are cashed in and out.
I'm not a CPA.
We're not CPAs. So as far as the tax stuff, that's something you got to check with your own CPA, your own situation. But as far as the control of the assets, how does that
As
work?
far as the control of the assets, you have more control in this system
Than
than
current.
you even do currently in your wallet.
Okay.
So the whole philosophy of this goes back to it's an old school mentality of sovereignty and this mixed with the new world technology. When you
Mhm.
used to go to the store, right, you would buy a product. Okay. You would pull out your wallet. Now, did the cash register know how much money you had in your wallet?
No,
No. As long as you were able to provide
enough.
your side of the transaction, then the transaction went through fine. Now you took possession of whatever widget it is that you just bought, right?
Mhm.
And then you put it in your pocket and you walked out the store. Now, does anybody on the street know what you have in your pocket?
No.
No. That's the type of anonymity we have.
So that's the type of control that you'll have. And I know, and I don't know if this will go over too many people's heads, but I know the way you'll log into the debt platform is, if I'm not mistaken, is like you do on other Web3 platforms with your wallet, signing the transaction,
It'll be
right?
connecting the wallet.
So that is something, guys, as well, is the only way to log into the debt platform on the new stuff will be by connecting your wallet. And so as long as you have control of your device, right?
Yeah.
You have control of absolutely everything.
And let's not get too far into the weeds. on
Correct.
that.
Yeah. I just
mean,
wanted to kind of.
that will make more and more sense as we release the
Correct.
information over the
Correct.
course
Yeah.
of the next little bit of time.
All right. All right. This one is in Spanish, so I'm going to translate it on the fly here. What is the purpose of opening Debt's own blockchain, and how will this reinforce the ecosystem, or reinforce it? And what is the best way we can get prepared for what's coming in this moment?
Okay. So
Sorry, that's my bad
there's a
translation.
huge benefit
Okay.
to open sourcing this and having as many projects as possible come to us. The reason for that is every project that comes is going to have to be paired with debt from a liquidity standpoint.
Correct.
Okay. Now, if you look at the fact that we have 50 million token total in debt,
Mhm.
okay,
No more,
and
no less.
no more, no less, and not all of it has even been distributed yet,
Correct.
because it's on a half-life cycle, right? So as projects come on, depending on the size of the project, they will have to have X amount of debt token paired on the decentralized exchanges in order to provide their project liquidity. That is all built into the RPF protocol, right?
Correct.
Where that's the funding pools or the liquidity pools are going to be funded automatically. They're never even going to touch the hands of the owner of the project,
Mhm.
right? And so in calculating that out, there's actually kind of a fun thing you could do. If you open up your debt app.
I just learned this yesterday,
Mhm.
guys. So look, and this, if you guys open up your debt app or your Xnode app, wherever you're at, okay.
Mhm.
So go to your debt app. If you need to log in, well, Jason kind of explains this to you.
Go to your
Jake.
my mom does it all the time, so you're fine.
I do it with my kids all the time too. So.
So you go into your swap function and go USDT or Tether to debt. Okay. Now, the more projects that buy into debt, the more you're going to see the demand for debt grow. Okay. This is, like I said, debt was designed a little bit different. It doesn't have a project funding into it.
Correct.
It doesn't have the royalty model. This is debt's royalty model.
Okay.
And that's from the beginning. So,
okay.
So let's say I have a $30 million hotel, right?
Okay.
And that's the project that I want to come forward with. Well, in order to do that, I'm probably going to need almost 10 million of that in the liquidity pool. Well,
Okay.
that means 5 million of it went to debt.
Okay.
Okay. So now the question becomes, how many projects do we think that we can launch?
Okay.
Now, yesterday in the meeting in the room there, we came up with about 50,
Yeah.
just for the participants in the
Yeah.
room.
Uh-huh.
Now, outside of what happened yesterday, we've already soft circled about another 75. Now, these are projects with a wide range of value attached to them, right? Some projects are going to be smaller mom and pop shops that maybe are only a $3 to $5 million, total deal. Other ones, BGLD, Grow, these are $100 million projects, right? So now the playful thing becomes just the sky's the limit. I mean, how much is going to happen? And so if we got 50 million or 50 projects all contributing $1 million each, then in your calculator, put $50 million in there.
So we would we go into the app, we go into swap, and then you put in the top part tether,
Top part tether.
bottom part debt. I just want people to kind of understand that top part tether, bottom part debt.
Mhm.
And then we're going to type in here
50 million.
50 million because we're getting 50 projects,
all contributing,
all contributing $1 million, right?
Mhm.
And I think that's Jason in the telegrams talked about that quite a bit, right? Getting 50 projects. So it'd be $50 million. Okay.
Yep.
So I'll type in 50,000,000.
Now, this is using Pancake Swap's internal math and
Okay.
algorithm. So this isn't us, and this isn't a guarantee of value or anything else. It's just kind of you ask kind of what is the value, what is the incentive, and this is
Yeah,
what
it's
it
a nice
is.
calculator
Yeah.
to have, right?
Mhm.
Okay, so it says put in 50 million. It says in red, this amount exceeds your available balance, obviously. So you're gonna
So
see
sorry.
that. Sorry. But down at the bottom, it says one debt is equal to 228.09 USDT.
Yeah.
So that's saying if 50 projects with $1 million, so $50 million in liquidity came in,
Mhm.
it would take the price of one debt to $228.
Yes.
Okay.
Now, what if you had 50 projects contributing 10 million?
What would that be? 500 million then?
Mhm.
1, 2, 3. 1, 2, 3. Okay. That would be one debt is equal to $2,124.
Now, here's the dirty little secret, right? The sky's the limit.
Yeah.
It's not a matter if, it's a matter of when.
Correct.
As long as we do our job as the community. Our destiny is in our own control here. To put this into perspective, there's not a single project that we have released that's not $100 million project. So it's not that these are, to even say $1 million per project is so far conservative.
And I want to remind people, these are for illustration purposes only, right? Obviously, it's going to depend on where the rubber hits the road as far as bringing these projects in. But
now, what else is paired with debt?
All the other projects,
every other project we have. So if debt rises by a factor of 2x, then every aluminum, every Explorer, every increases in value as well.
The rising tide
raises all ships.
Okay. Awesome. Next question here from a protocol standpoint, how will the transition from BSC to debt chain, specifically regarding transition of current debt token holdings to coins, will it be one-to-one hard fork type?
Yes.
Yes. Great question. It'll be hard forked one-to-one. Great question. Any other ones there? Do we have any good news on gas fee swapping withdrawal charges? I don't know if that's a full question, but I'm sure that's to be determined as far as what the fees are going to be on the layer one, right? How much debt it's going to cost you to send.
Yeah, we want to make it
comparable.
Okay. There's two different things going on here, right? We have our internal tokens that'll have, for the most part, a 10% tax. That's not going to change. That helps the deflationary aspect of the token. But when you have the actual gas fee that's currently paid in BNB, we want to make that very competitive, we want to draw. It's more important for us to get the projects to come to us than it is to make the 10 cents per transaction.
Correct.
So we need that there because that supports the innovation of the toolbox and everything we're building out there. But we're going to make it very attractive for people to come here.
Okay. Is it best? I know. Okay. I don't know if we can answer this question for you. Is it best to buy debt micronodes versus debt token coins right now? I was fortunate enough to buy one debt license. Should I proceed to help my team purchase coins versus micronodes?
That's a personal decision.
It's going to be a personal decision. So whatever.
The thing, I would look at it this way. You can either hold cash or you can buy the ATM.
Yeah. And I want both.
Maybe you want both.
I want both. Yeah, exactly. Okay. Let me see here. Oh, so as I do have so can you highlight that one for me, Colby? Bob right there. Okay. And I haven't read the full question, but I think this might be a little bit for me. While the SEC works through all their things. Currently, Binance US is not allowing deposits of USDT Tether. We'll be able to simply purchase coins, tokens, licenses directly via credit card, debit card, or set up ACH transfers from a bank account. So that's more of a me question, so it's okay. I'll go ahead and answer that. So as of right now, we do allow micro purchases with credit cards. We also allow standard perpetual licenses with wire transfers here in the US. So you would need to just get with your brand ambassador upline and they can get you those details. And if not, they're listed when you do a COD order, you can get the wiring instruction details is there. So what if you have your tokens in a cold wallet already? The current BEP20s, I guess they're what they're saying.
Yeah. So then whatever
migrate,
point in time that you migrate over, again, it's just going to be a one-to-one.
Yeah.
You can do that at any point in time that you choose.
Yeah.
But
Okay.
I think when you see the benefits of what we're doing here, from a security standpoint and the reasons why you put it in a cold storage wallet, this hasn't taxed. So it'd be very attractive to move it over.
Okay. So if it's on a cold storage already, don't really worry about it. There'll be the migration tools and the hard fork ready for you. Okay, this one is coming from a US person, so I'm sure they got some information. Any update on being able to borrow against your tokens that we have in our debt box wallet? Get in line, Kyle. That's what I'm going to tell you. Get in line. I'm just kidding.
Yeah, we are currently working with 2 banks out of Abu Dhabi.
Yeah.
Again, and part of the connections that we have there allow this to be possible. The question is going to be, it's going to be a walk before you run, right? Because again, debt is relatively new still in terms of these institutional lenders. So we got to establish the value. We have that right now with debt token.
Correct.
And so we've actually been able to do that on one account so far. I mean, we're the test guys, right? So we've been able to do that on one account. We need to test that, make sure it works, get through all of the compliance issues.
Yeah, you're dealing with banks at that point.
Yeah, before we release that on a grand scale.
Okay.
But
it's in the works, guys. It's closer than we think, but obviously it's going to be a controlled launch as well. Okay. I do have a comment here. It says, and this is something y'all answer. Every time I withdraw, I lose BNB from my wallet. Yes. If you're making a withdrawal, your withdrawal fee is $5. If you're just doing it under $1,000, if you do not want to pay the $5 withdrawal fee, wait for a withdrawal-free holiday, which is coming up July 1st. Our next one is July 1st, and then also just accumulate over $1,000 in token, and it'll be absolutely free. Okay, just reading through some of these here. Swipe, guys, the crypto debit cards for the international markets, we're okay. I think July 1st is still the target date on that. So the only jurisdiction that has a limitation on it right now is the good old USA, because of our good friend out there regulating everything. So how does Swipe impact facilitation to crypto to fiat? If you're in your international markets outside the US, it's a great way to get it done. If you're inside the US, maybe send a email to that 3-letter agency out there if you want. We'll get you Gary's email. Okay, since the DEP blockchain is coming, will we bring the Swipe Protect sooner? Or so again, with Swipe and everything of that sort, it's July 1st. However, with the caveat of it's not going to be available for US clients. NatG halving is July 1st. That's coming around the corner, guys. So I'm just going to take some of these. The insurance from debt. So guys, as far as the insurance for the fraud, the layer 1 blockchain, the listing of the projects, let's wait till there's, till we're closer to the date, all of that insurance, all of those details for the RPF protocol, the rug. That's what I want you guys to take away from this. Insurance, viability points, RPF protocol, rug pull free protocol. That's what people in crypto need right now, along with decentralization and getting back to this control of your assets. Okay. All right. So as far as, and this is a great question, and I hope, I hate giving this to you right now.
Okay.
Wait, I put this in our chat last night. We have, just so you guys know, DebtBox debt micros are available in your back office right now. So you guys can go purchase those now or after the call. The debt micros are going to come with an airdrop, right? That's the question. So I'll read the question. Debt Micro is providing an airdrop for any of the upcoming licenses, upcoming projects that are going to be available, right?
Yes.
So the answer to that question is yes. So if you buy a Debt Micro, any of the future projects, you're also going to get a slightly discounted airdrop for that project as well. Now, remember,
Think of it like a discounted coupon.
yeah,
That's available to be used at the beginning stages so that you can participate in the optimal mining stage without paying the optimal price. in
correct.
essence.
Yeah. And remember, guys, with the new pricing and stuff like that, you get it. You're getting a optimal price, a better pricing. You're taking advantage of the mining that's going on early. But at the same time, if you don't purchase it and the price goes lower, because I've had some people, well, then just don't purchase the airdrop anymore. Purchase through the normal means. Okay. What happens with the Royal Bank of Scotland? We have problem to buy USDT and would be great to have any. So again, I already answered this question as far as the debt card. It's only available for non-US people. That's going to be starting July 1st.
And we're not the only ecosystem that's having problem converting.
Correct. Yeah.
Money.
This is affecting everybody along the way in crypto. So we got a question here is as far as the micros, the debt micros are put out. It was put to a vote, and the reason behind this, and maybe you can elaborate on this a little bit, Jake. But I know from Jason when I asked him like, hey, why are we doing this vote for the debt micros? Number one, it's because of the layer 1 blockchain, but number two is it's going to allow decentralization, because right now, if I'm not mistaken, a lot of the debt nodes are held by a lot of whales, a lot of a concentration on it, right?
Yeah, because debt was the second project that we released.
We didn't have that wide net,
and it was well before our partnership with IX and some of the other partnerships for distribution that we had. You got to remember at the very beginning of this, Jason was able to go out to kind of the institutional clients with big money, which is why, I mean, IX makes up only a portion of the cells that DebtBox, has. We've got some very, very big money players involved, $20-50 million chunks at a time. So what we looked at is we got to get this out as we have faith in what the things that we're doing, from the layer 1 to adding projects on and all of that, to establish the value of debt, like in a very real sense. And we can play around with the calculations and do all that, but we want to get the ability for people to participate in that on a grand scale. We're opening up new markets like South Korea and Asia and all that. We want to get some of these in those hands so that everybody has a chance to play.
Correct. Cool. So again, decentralization, big key there. All right. I really don't have an answer on any of the US based stuff, guys. We really don't have any clarity on that. So we're not going to be able to provide any type of solutions for you at this point. And as I come up with solutions, I know one of the things, just for anybody that's out there listening, one of the things that we are doing at IX is we will start paying out commissions probably in USDC ERC20, because the ERC20, which is the Ethereum based coin, can be cashed out at, for example, Gemini or Kraken or even Coinbase at this point. So we will be adding support for commission payouts. So you'll be able to get those into an exchange like Gemini or Coinbase or Kraken that have ERC20 support. Okay. All right. Well, I think we're on here about an hour so far. We had a little bit of a technical difficulty getting started. All right. I will see what I can do as far as the coins there. That is about all I have for questions, it looks like. Let me say this. Debt micros didn't get assigned, or the answer 1x debt. One debt micro. will be the same for both micro nodes and airdrop. Okay, yes, the answer to the question is they will be the same. The debt micros will come with an airdrop. So you got one airdrop per project moving forward, okay? All right. All right, guys. Well, let's go ahead and start wrapping that up. The airdrops, those can be explained by your upline. Any of that information will be available on our regular Xnode calls. I want to thank Jake for being here with us today. Thank you for coming. I know it was kind of hectic trying to get everything set up, but I really like this format. Colby, thank you for getting us set up over there.
So we thank God that we are part of this service. Over to you.
But even with that knowledge, we who remain must deal with the reality of this death that has occurred. This death that took Clive from us, from being able to communicate with us and who we could see and touch and feel. It's taken Clive from us. He's become part